Ladies and gentlemen of the crypto space, we're live in a late afternoon session on Friday, December 3rd, 2:12 p.m. Who's ready for a raging dose of rationality today on a day that the market's disappointing, looks a little flat, down, negative, bearish, people are depressed, people are feeling like they're going to lose everything. And we're going to break it down into how you think or can think about interacting with markets like this to do better. And as I would argue, getting out of the market is irrational. Doesn't make any sense. What matters is if you feel like you're losing too much, you have too much exposure to the market and not enough isolated capital into a position that's not necessarily going to depreciate. This has to do with your cash balances. And this has to do with exactly what I talked about in my Twitter post rather than the title of the stream today, but isolating tranches of capital for different purposes with different rules that govern each group of capital, each tranche. So this is going to be a nice stream. We'll break it down, hopefully make it a little bit simple, talk about some serious time horizons. And I know folks are probably overextended, probably overdeployed, over allocated at this point. And that's really when the fear kicks in the most. Let's pop over to the main screen, look at some charts, and we'll talk through the logic and rationality. Now, everyone's feeling the way they are with the stock market on the daily barely at the 100 SMA. It didn't even break it. It's just not bearish. This is a pullback. This is the incredibly up only chart. And you could say it screams mean regression, but it's not like you have resistance, support flipped resistance. It's not like you have lower highs and lower lows. It's literally just a series of higher highs and higher lows. Even where we are right now, it's a higher high, it's a higher low. Even with these giant volatile retraces where bears attempted to attain control over the market. So this stock market filled with equities that no one following me on this stream would have much interest in, unless you're interested in like battery metals and shit. But the point is, even this market isn't bearish. So let's take a look at some crypto charts. And let's sprinkle a little dose of hopium onto what looks like a depressed crypto space. Twitter's quiet. The Discord channel is quiet. We don't need to be quiet. This means maybe you had too much risk on, or you weren't extracting value on the way up. But that's the difference. We handle it differently. We're not extracting value by liquidating principal. We're not selling the business. We're not selling the pizza shop. Maybe you were reinvesting too much into the business. Maybe you were taking the cash flow and you were compounding too much, attempting to just grow risk on assets, the quantity of risk on assets you have. What does risk on mean? It just means it's volatile. And now maybe you have an opportunity to think that you shouldn't have been compounding. I know at least a couple of people in the channel were isolating cash flow, maybe not intentionally. Maybe they weren't thinking about the topic that I wanted to talk about today, but maybe they were doing that. But now, maybe more than ever, it's important to talk about that very course of action. Cash flow is optionality. When you get a paycheck at the end of the week from a business, it's in cash. Just because your cash flow in the crypto space is interest denominated in Blizz and Geist or in 3 curve and curve and CVX doesn't mean it's not cash flow. If you're getting paid your salary in a volatile asset, you're exposed to the market. And now, more than ever, maybe you second guess that. And you carve out a portion of that daily and weekly revenue stream for a stable position, of which there's a plethora of options of how to denominate or how to attain exposure to a stably priced asset. And that's the deal. You want optionality in times of not outright bullishness, in times of in a time like this, when the market is down in legacy finance, when you know you really want to look at what Jeff Snyder's looking at with the euro dollar, and between him and Stephen Van Meter, that's your contrarian ideology go to understand when the market may experience some sort of a liquidity event, which would be a dramatic depreciative impulse. And none of this really plays into the longer time horizon. All of it is transitory. If you have a strong deflationary impulse and the legacy markets come down to 3,400 and you have a fat dip and a rip just like you had back here in March of 2020, do you think they're going to be able to keep the markets going if they took the several months that they did last time? Or maybe they'll have to accelerate their interventionism. It'll have to be even more pronounced and more dramatic. And that was the whole point of what Satoshi was thinking. He knew that this was going to occur. That's why it was created. When they have to intervene more and more to keep the system going, the asset that has the least supply will appreciate the most, and that's how we got to where we are. Anyway, I don't want to digress. I'm about to digress into what Bitcoin has become versus what it was originally conceived to be. Let's look at a couple of other charts, but let me skim through some comments and see if anything's pertinent to the notion of isolating tranches of capital, which I think I hope folks have done it. I hope folks have a little bit of capital on the side because maybe you need some cash, maybe you need to pay some bills, maybe you need to pay a car loan, a mortgage payment. I have no idea, but you can't just compound shit. You know, let me do the comments before I continue with my monologue. Matt Patrick's in the house. A pleasure. Liam, first time tuning in. Certainly a pleasure in that case. Liv W, howdy, howdy. Lay it on me, Patrick says. Well, the rationality, where you could watch 40%, 60% of your portfolio disappear, and that's not irrational. That's what I'd like to argue, because you should have been in the market before that price point. And if you're in the market anytime in like 2020, mid 2021, after like June, July, August, yeah, maybe you're overexposed, and that's a bit of a concern. Now that's another story. I don't want to digress too much into overexposure into the market or late entry or bad entries. I'm horrible at entries, but if you've been in the market since we've been doing our stream here, you're in the market since at least early 2020. And hopefully people are in the market even before that, 2019, 18, 17, 16, 15. In which case, time in the market trumps timing the market always. We know this from legacy finance. Everyone talks about that. So if you're in the market since 2020, who gives a shit if there's a 60% drawdown? You came into the market with 100 grand, you got a couple of million at this point, and what a 60, if you came in the market with 100 grand, if let's say you struck it to 10 mil and you got a 60% drawdown to 4 mil, 100 grand to 4 mil, oh, that's horrible. The horror of the 60% drawdown. Because where's the market going over a long enough time horizon? So entries are critical. I talk about it with Ohm and Time, where I want to buy a position at a discount rather than a premium. So you want to buy your assets at a discount. Do you think your assets are at a discount right now? Um, it depends on the asset, obviously, and this is why we look at technicals. I think Curve is pushing for a bit of a discount because it's breaking trends to the downside. I was hoping for it to stay above this pitchfork, which a couple of folks in our forum, Josh, I don't know if you watched the stream, but you got me into this. I like these pitchforks because I also got my moving averages and a variety of other technical indicators that I think are meaningful. Wasn't the daily? Yeah, the daily 50 SMA is just below. So, you got a couple of, there's no one set of technicals that are overwhelmingly meaningful. So you look for a confluence. So there's no reason the pitchfork as well as these trends could fail if it bounces off of the 50 SMA. So if there's a bounce off the 50 SMA and it's just a wick, well, maybe not in the next 4 hours. We'll see what the weekly looks like for the fun of it. All right, the 50 SMA is much further below. But look at the weekly. The weekly, you're significantly in the green TWAP, time weighted average price. So you could have significant price depreciation and still have a very green average. So this is why time in the market beats timing the market. I mean, if you bought down here at $1.41, does it matter if you're at 438 and everyone's screaming that the market's bearish? And that's why I very much love our value allocation ideology, where it's not about selling the curve itself, because the curve makes more curve. So if we're focusing on the yield and you're making like $3,000-4,000 a day, the horror of a 60% drawdown, oh, your salary drops to $1,500 a day, $2,000 a day. Oh, the horror, the horror. Your business is still intact. You never had to liquidate any of your core portfolio, and you're still generating a salary. It's the salary that matters. Everything else is a red herring. And the fear will cause significant tax obligations. Fear causes tax obligations. Conviction creates a business. You know, you got to look at the markets. I encourage looking at the markets differently. I'm staring at the chart, and I think this looks good. I mean, how could you? This looks bullish. This on the weekly chart, it looks ridiculously bullish. I don't see any bearishness actually, and I see these these trends actually become relatively short-sighted at best. And what I would look at is just these price points. So what do we have here? Resistance. So thus far, this price point has not been breached. It's tried to on the weekly for a couple of weeks, 1, 2, 3, 4, 5, 6 weeks. And there's no reason it won't necessarily do something like this. Maybe another retest of the historic trend, or maybe just a retest of the TWAP, just as we just drew. But there's no reason to think this is necessarily a bearish chart, considering the macro or the properties, the fundamentals of the protocol. Disinflationary is transitory periods of deflation. People people would call that like in it for the tack. I don't agree with that. It's more than that, because when you say like in it for the tack or diamond hands, I find that shallow. You know, look how Bitcoiners talk about. Look how Bitcoiners talk about what it means. Why every other coin is garbage. Bitcoin maximalism. It's a special protocol. There's nothing. You don't need any other coin. You don't need it. Therefore, everything else is going to go to zero. That's not the point. My point is that degree of conviction. It's just so obvious for these assets. Now, clearly, I would argue Bitcoin maximalists as such are blinded. They've gone a little too far. But the properties that's important, that's most pertinent in my eyes, are monetary properties. I don't think money evaporates overnight. Bitcoin maximalists seem to think money's going to evaporate overnight, and fiat currencies are going to go away, and governments are going to give up their power. I don't think it works like that. I don't think they keep all their power, but I certainly don't think they're going to give it up to the pure decentralized system. So I think assets like this are extraordinary. And this chart, we always come back to this chart. We always come back to curve. And there's a reason why it's the core of the portfolio. There's a reason why. It's because of this chart. It's because of the properties. It's because of the monetary properties. So we're rational here, boys and girls. We're rational. We want to do things differently. And that's not for me to say not to sell, not to liquidate capital. Maybe you need the damn money. Maybe you shouldn't have put the money in the first place. So maybe the rational course of action is to liquidate capital. Bear in mind, it's always subjective. The better play is what I try and talk about. Maybe I'm doing the better play. I don't know. I try to, and that's why I talk to you guys, and you guys seem to think my ideas are useful to some degree. They've been successful to some degree. They're certainly different. Certainly different. So the monetary policy is what counts, in my opinion. Big Zoo's in the house. Good day, consor. Kind sir. Igor. Nick. Captain Hope, everything is well. Thoughts on reflection coins? They will die out really quick. Diminishing returns are extremely fast. Yeah. And so, period. Period. Diminishing returns. They don't have life. Now, bear in mind the monetary policy of those reflector coins are really cool. I like them. I like that effect, but I've yet to see any of them have anything other than diminishing returns. That basically it falls off a cliff. I remember one that I really like called Statera. Statera. This was last year. Yeah, in fact, here's the contract. I've looked over the contract a fair bit. It's a simple contract. And this is what it takes. This is literally like your coin here, Avapay. I mean, it's not much more complicated than this. And this is a relatively simple contract. And in fact, nowadays you could use like library. So bam, there goes that. That's another library. Bam, these go bye-bye. The interface goes bye-bye. So literally the entire contract is this. And this is deflationary asset. So you could easily have an additional, address for USDC, an address for whatever choice of AMM, maybe a Paraswap or a 1-inch. So you get your best swap rate, and you could swap stuff to USDC and so on and so forth. So you could have automated transactions, but that's exactly what they do. Avapay. That's what was it? Apex, APE-X, Hatter, and a bunch of others. So I'm not too interested in them at all. Decided to put my CVX CRV back where it belongs. Yeah, I got tempted as well to carve out like a 15% stablecoin position, especially after talking with the family, my wife today. But I don't think it's warranted. The more I think about it, let's go back over to CVX CRV. Is it what is it? Greed, hope, fear, anxiety? I think about the emotions all the time because if you are a Bitcoin holder, well, Bitcoin is not a productive asset, so it's not the same. It's just not the same. If you had a Bitcoin at 250, watched it go to 20 grand and back down to 3, and now it's at 50 whatever, that's rational. You don't have to sell the top and buy the bottom to be rational. Now, if you bought Bitcoin at 20 grand and it went to 15, that's not the same story because your entry was shit. So there is the concept of protecting capital loss. But if your entry was early, there's no capital loss. And your entry is so early that you could have such a massive drawdown and be in such massive profit. It's rational to watch it go down and go up. to avoid the tax obligation, in my opinion, because you have the capital working for you. I don't know, being exposed to an excessive tax burden, I don't think is warranted. I just don't. Doesn't make any sense to me. Um, Adrian M, a pleasure. Dan, good afternoon. Thank you for Friday afternoon stream. It's a pleasure. 2:32. I'll see how much I can get through today. I have some work at 4 o'clock. Thoughts on adding to CVXCRV position with a long time horizon? Let's look at the slippage. I'm pretty sure there's a bonus. So there's a premium swapping to curve from CVXCRV, which produces a bonus if you go the other way for arbitrage and balancing the pool. Curve the C. Yeah, look, 3%. There's currently a 3% bonus acquiring CVXCRV right now. 3%, nothing to sneeze at. You might want to wait for a better dip. You might want to wait for more discount. There could very well be more discount. Look, the 50 SMA on the weekly is over here, so it's Friday. Now, bear in mind, it'd be nice to see a bullish Friday. We'll see. Well, a bullish weekend. So maybe we'll find support on the 50 SMA. Let's zoom out a bit and go over to the daily. I mean, you're already at the 50 SMA on the daily. So we'll see how much of a it's all about discount and premium. That's an interesting way to put it. Let's see what kind of discount people get in buying it. That's an interesting way to put it. One curious view. Hey, Noah, are folks aware of the Badger hack? Yeah, I've heard of it. I haven't deployed to Badger. There's too much opportunity cost, in my opinion, with Bitcoin, unfortunately. So I was inherently uh, discouraged from engaging with the platform because of the choice of assets that the platform was working with. In any regard, there was no smart contract issue. Unfortunately, there was a Web 1.0 exploit, which is very unfortunate given the complexity of the contracts that Badger has created, and they're non-trivial. And I'm in a forum with Spot Boom, so I have a feeling they're running around with like chickens without heads right about now, trying to figure this out, how to mitigate a relatively large capital loss. It's no fun, not fair, not fair considering the work they did. I empathize greatly. MHMA, so where to park it? Well, dollars are useful. You know, if you have a $3,000 a month overhead for rent, car loan, whatever, I don't know, food. Maybe you want to. Well, what does Susie Orman say, or what do those legacy finance folks say? Probably want to have like 2-3 months worth of emergency funds. So operate your personal financials like the traditional people say. You want a couple months worth of savings. Okay, great. Everything else is capital investments and allocations for the future and money you don't need because you work. And you shouldn't be spending more than you spend. You should be spending less than you make. You should be budgeting. You should be rational with your capital. You shouldn't be spending more than you make. So a good part of investing starts with good financial management, good financial health and well-being of how you manage your bills, your credit. I mean, you can't really be investing in markets, can you, with credit card debt? I mean, that's leverage. I don't invest debt unless I'm able to unwind it. So, what's the point of having credit card bills at 20%? That's a ridiculous interest rate. Doesn't make any sense when you could borrow capital on Abracadabra for 0.5%. I mean, what is it, Celsius all of a sudden? I mean, literally, it's 0.5% to borrow capital against SPEL or SPEL. If you go over to the stand, SPEL, there's $6 million to borrow at 0.5%. 0.5%. That's a cheap interest rate on debt. That is cheap debt right there. And look, you can pay 2.5% on UST if there's any capital availability, but that's another story. 13 mil on Bitcoin. Try crypto. 55 mils available. Huh. Try crypto is an interesting position. It gives you exposure to Bitcoin, Ethereum, dollar stabilized, which is very interesting. You guys know, we don't have to go into Curve and what they're doing with their V2 pools. Curve ETH has better rates, slippage rates than everything else. So once it explodes to all the other assets, it's going to be a black hole of liquidity. Look, Curve F, so Curve STF. So you get an 0.5% interest rate on Ethereum, and the last I checked, Curve STF was paying 6%. So this is a free loan. You're getting paid 6% to borrow at 0.5%. And this, look, 24 mil on Ethereum, 0%. I don't know how many people have seen that, but 0%. You can literally just borrow money. You can collateralize your Ethereum for 0%. And this is because, obvious reasons, they're going to miss out on some capital to encourage people to collateralize their Ethereum such that MIM is backed increasingly by Ethereum. This is highly encouraging of collateralization of pure Ethereum. Interest bearing, actually. Now, if you go over to Yarn, you can see what the interest rate is. It's probably a couple of percent. It was always relatively small. But the STF has a nice interest rate, 6%. So 6.5. 6.14 minus the 0.5. Extraordinary. So where do you park? Dollars? One. There's three tranches that I wanted to talk about. You have your capital allocation, so allocated to volatile assets. That's everything that we do in the crypto space. That's Curve, Spell, everything that we buy. It's our portfolios. Then you have stablecoins. Your isolated stablecoins. That's your cash of the crypto space, which you can deploy to an LP position if desired. And that's how you accumulate like a crypto stablecoin savings account. But obviously, stablecoins you kind of want to deploy at some point. They're kind of transitory with regard to opportunity cost, because clearly when the market's appreciating, stablecoin is pure opportunity cost. So it's an interesting dynamic. So that's how you manage risk. So you're taking on opportunity cost to increase your risk tolerance, how much risk you take. So if you have, as well as your optionality. So if you have an increasingly sized stablecoin position, let's say you have $1 million portfolio and now you're up to 50 grand, 100 grand worth of stablecoins, you have a good amount of optionality. Now, if the market's bullish and you have an excessively sized stablecoin position, you're going to be exposed to increasing amounts of opportunity cost. So you want to deploy it. Albeit the risk tolerance part of the calculation, maybe you don't feel like you want to deploy it and you feel there's too much risk in the market. Say you can grab 30, 40, 50% return on popsicle finance on stables because that's how much capital churn there is. Why do stable coins churn? Why is Curve paired with Ethereum churning? Why are all these AMMs churning in capital all the time? Because of fear. Lack of conviction, uncertainty. No one knows if the market's going to go up or down. So they exit to stablecoins, and then they see the market go up and they rush right back in. So the capital went to stablecoins, it goes back to assets, and all the while you're able to capitalize on those transaction fees. How fascinating is that? So how do you outperform that? How do you outperform that market where people are frantic and overwhelmed and they're indecisive and they're going from stables to assets and assets to stables and back and forth, and maybe they should take money out and go to a bank account because it's so scary? How do you outperform that? No matter what, even if you don't make more money, even if you don't make as much money as possible, you're always going to be outperforming that if you're cool, calm, and collected. And you have a strategy. And you have the capacity to think rationally when faced with a market that has no idea what the fuck it's doing. Look at that. 50 SMA. There you go. 4.25. Let's see what it does. Look at that TWAB. Look how much above the 50 SMA it is. Let's see what it does. This is where we're at. Let's see how irrational the markets can get. Because you realize if this is going down, people are opting for another asset that's outperforming the fucking dollar. It just shows you. Did you guys see those? Look on Twitter, the last two videos I posted. Not this one. I thought I posted another one. Oh, I thought I posted another one. Darn it. All right, so the point was I posted something like you can't give away gold, you can't give away crypto. People don't understand it. They're like, how much is a gold coin? They think it's like $50. This guy was on like a beach boardwalk and he couldn't give away gold. The general public is so departed from reality. They only think in terms of dollars. So they're ruled by fear. They're in need of governance, unfortunately, and that's just tragic if you really think about it. They can't take responsibility. They can't govern for themselves. They can't do better. Just they need to be told. But anyway, I don't know. I'm digressing. The point is, I'm glad everyone's here. Everyone that joins my stream wants to do better, actually gives a shit. And that makes me happy. Literally, there's so many people out there that turn down education, turn down knowledge. I mean, when Raoul Pal made Real Vision Crypto free, my goodness. How many people just ignore it? What a tragedy. What a tragedy. 40% of all US dollars ever created were created last year. And people still don't care. They don't take the time, take the effort to do a little bit better. Just do a little bit better. Because that little bit, that's what gives you the edge. That's like 51% against the house, and you can outperform the market. All you need to do is do 51% to win. Markets look pretty good in Incumer land. Yes, they do. How's your daily income? It's probably down, but guess what? You're going to work, you're getting your salary, and now you have income that will grow over the years, that you could take salary and save in assets that produce income. Volatility is a red herring. That's my argument. And, I have a luxury that I'm able to sit around the computer. That's my job. But in Coomer, you don't have to sit around. You can lead a non a non Noah life, like a normal human being that's out, that works, that goes out to happy hour, goes and is out with friends. I have a wife and family. I don't really go out much, but he can lead a normal life and be exposed to this stuff. Except this is your savings vehicle of choice. Instead of saving in a bank account where the bank is fucking you, you're saving in an asset that's paying you likely, more likely than less, an asymmetrically appreciating asset over the coming years. Whereas you're not getting anything in a bank, you're not getting anything in a CD, you're not getting anything, you're getting shit in an ETF, you get a fraction of a percent, albeit tech stocks are likely asymmetrically appreciate, as Raoul talks about. That's another story. You see Spartacus Abra? Yes, I did. I saw it. No interest. Best place to park stable is Anchor, Popsicle. Yeah, I get tempted with Popsicle, except the damn transaction fees on Ethereum mainnet are so high. Yeah, I would park some capital there, so I have enough stablecoins such that the transaction fees on mainnet I could deal with are palatable. Like if it costs $1,000 to for a deposit transaction, you better have a fair amount of stablecoins to make that worth it. That's just expensive. Lewis, my man, I've been meaning to ping you. I'll be able to find time, like I told you I would. I can't remember over the past couple of years if the crypto market has just sat there in this tight range. Thoughts? Well, let's look at Spell. Let's see if it broke what I was looking at. I hope it didn't. Look at this. Look at that wick on the damn. Look at that wick on the 4 hour. But look, 0.786 on the fib retrace. So the market's been quite volatile over the last hour, with the curve depreciating from 470 to 420. Yet Spell was up 2 pennies. So it's ranging, and obviously this is what an inverted hammer, some would call it. Albeit it's not a gravestone where it's literally down at the bottom. So I don't think it's that. I would argue this is more of an inverted hammer that just has a very small candle body. Because 1, 2, 3 waves down, 1 bottom, 2 bottom, with actually a higher high, so there is a positive slope there. Top it all off, you're above the 0.786 on the retrace. How much lower can it go? Basically, this chart screams, there's no one left to sell. Who in their right mind is going to sell this shit? Oh my God. An asset that pays, an asset that's run by Danny and crew, an asset that has, let's take a look at the revenue stream real quick. And there's nothing, no one's left to sell. An asset that is pulling in 5.5, 2.4, $3.8 million a week, 10,000 loans, 3,000 loans, 2,000 new loans. Now this is a highly utilized asset with $5 billion of TVL. To me, that's quite interesting. So that's not fundamentals, that's technicals in many regards. This here on-chain data. On-chain data combined with technicals screams this is a used, consumed asset that people are going to want to leverage. They're going to want to use to access equity and generate capital gains. And while they're generating capital gains, I'm more than happy to take a slice of their debt interest payments. I'm just saying. Josh, you are watching indeed, my friend. Vartek, my man. Liv W, do you have many assets in Terra? I do not. Didn't AnySwap add Terra? Let's take a look real quick. I gotta wrap up the stream in about 10 minutes. Didn't they add Terra? Arbitrum. Harmony 1, that's cool. No Terra. They said they did. Maybe it wasn't. I don't know. I don't know. But yeah, I like everything that Do Kwon does. I like that whole crew. Ryan's in the house. A pleasure. Vasco. Badger Exploit was bad. Celsius lost 15 mil. Yeah, that's pretty bad. And I think regulation's going to come on thick. These are big losses. They're going to have some big insurance implications. They're going to have big consumer protection implications. And meanwhile, the people that took the risk early, I think, are going to benefit the most. And is Digital Land and Boats, the Fantasy Island, sustainable? Is Digital Land and Boats? Oh, Metaverse. It's pure speculative territory, my friend. Ding Ding is in the house. Plaza CJA started watching your videos about a week ago. The content value is huge. I think different. I want to just encourage people to do better. And just like watching Big Boy Crypto, you're gonna melt your freaking brain. and you're not going to do better. You can't do better. It's not possible to do better. You're guaranteed to gamble and speculate and do things that you normally wouldn't do, and you'll have no idea why you're doing it. So it's better to literally just buy stablecoins if you're that kind of person. And that's okay because you could significantly outperform legacy finance with stablecoins. People take on too much risk. People don't know how to quantify risk in the crypto space. Shit, I don't even know how to really quantify risk. I just know how to manage it or spread it around and know that if you spread it around too much, you ain't going to make shit. And that's how people end up with overly diversified portfolios. 20, 30, 40 assets. Not enough concentration, not enough conviction to really make some gains. The concentration to make them gains. Gabdoy. Hey Noah, have you looked at Astroport coming to Terra? It's supposed to be the curve of Terra. I don't look at new things. Things need to prove themselves. Trust is proven in the crypto space. So what establishes trust? Time. Time establishes trust. The earlier you are, the increased risk profile you're exposing yourself to. Now, can you outperform because of an increased risk profile? Sure. Can you make life-changing gains because of an increased risk profile? Speculatively. Can you lose a shit ton of money because of an increased risk profile? Sure. So, just as Badger's taught us, the less protocols you're exposed to, you're decreasing your risk profile. The later you are in deploying capital to a protocol, the decreased risk profile. The more diversified you are, the more decreased risk profile. And decreased risk profile also means you have a less chance of significant capital gains. So concentration, increased risk profile, increased capital gains. So my mentality goes to concentrate in protocols that have an higher reason to be trusted. And there's only a couple. So I have maximum concentration in stuff like Curve. It's trusted at this point. It's like Uniswap, except Uniswap just screws its entire governance. There's absolutely no reason to own Uniswap. Oh, I want to own governance rights to the future because I'm I'm a llama, and I want to move to the future of France. Oh, yeah, that's nice for people that maybe have a business or an institution, a college, a school, whatever, and philanthropy and shit and a government organization. Great, fine and Andy, but the general public needs to get paid. So, yeah, sure, we want to participate in governance. I participate in governance, but I need to get paid also. You know who owns a lot of who makes sense to own a lot of like XRPL and their validators, colleges. That makes perfect sense. Who should be running XRP nodes? Holy shit! And who should be handling Uniswap governance? Because colleges, because it doesn't pay. It's a not-for-profit Uniswap. But who pays? Curve. Curve pays. And it's decentralized. And they have IPFS portals. So that's really what tweaks my fancy. And when Danny talks about IPFS and critical mass decentralization, where it's untouchable from regulatory intervention, that piques my interest. That's what I want exposure to. DFI has DeFi on Bitcoin. Yeah, not really. You can't do what they do on EVM chains. It's just not possible at all. And I say that from an engineering perspective. And I know what UTXO is. It's a stack of operations. You cannot do anything that has to deal with state. There's no state management. There's no anything. You can work around it to some degree, but you will never be able to do what you do in the DeFi space on Bitcoin. You would need third-party centralized implementations, or you would need a third-party implementation that has some sort of decentralization, which is a technological achievement unto itself. Has a payment network, great, fine and dandy. Do you have any TA advice on the FTM chart? I'm not going to look at it at the moment. I got to wrap up the stream in a couple minutes. Sorry, Mark Loa. I'll take a peek at it another day. I like Phantom a lot. And it's clearly the most undervalued compared to what Avalanche did, Solana did. Yeah, it has the potential to simply go vertical. Do I want exposure to it? No. Do I have exposure to it? No. Do I use it? Yes. McMahon, I'm trying to see how Blizz might be different than other hyperinflationary tokens. Yeah, that's a good point. And that's what I always said. I kind of want to buy the bottom, meaning at some point, the amount of returns, like the yield and the revenue that it pays to lockers, will be enough to discourage liquidation, but the price point will have to go down. So we've had a great period where it actually had appreciation, which is nice to see, but I don't expect it to last. And it hasn't. 68 cents from a dollar. It's down 32% today, give or take. But it's still highly productive. And this should be nothing to sneeze at. I know, yeah, great. This was up at $4, $5, $6,000 a day at one point. Oh, that was nice. And I used that to accumulate a fair amount of stablecoins. I think I got like 110 chips sitting around. So I paid off basically both my Blizz and Geist position, and now it's just still producing. It'll go up, it'll go down. Come on, that's a ridiculous number. Now, that's greedy of me to say that that's too big of a number. Too big of a number. It's a ridiculous number that that people would die around the world to have, and I'm humbled to be able to have it. Talk about humble yield farming. What more do you need than this? Yet alone the curve and the other shit that we have access to in the crypto space. We should be honored to understand these systems, honored to have exposure to this, and we're upset and screaming in fear that it's down from $6,000 to 1,500, $5,000 to 1,500. Screaming in fear that the markets are going to take back everything they gave us. That's a huge amount of capital. I think there's a great deal of honor in the crypto space. There's a lot of honor here, boys and girls. This does stuff that people would dream of. They're probably dreamt of. The crypto is changing lives. It's a bit of a fantasy land. It's incredible. Luke Groman, I like Luke. JL, he's a big deal. Genesis Kid, Mickmon, look in the DFI. Yeah, yeah, maybe in time. Let them. I need to see some TVL. I need to see some APY. Let's see what the APRs are like, so on and so forth. It's all about opportunity cost. I got to wrap up the stream. I'm sorry if I didn't get to your questions. I'll be back Monday, obviously, so you know the deal. Friday, December 3rd, 3 p.m. I wish everyone a wonderful weekend. Tell everyone to subscribe. After party on Discord, I'll be there all day. I wish everyone a great day. Be good to yourselves. Don't fret too much. Don't stress too much. Try and remain rational. Ask other people for their opinion, not about buying and selling. Ask them how do they feel about the market. Ask them for technical analysis. Try and expand your time horizon. Try and be more rational. See you on Monday. Peace.